All right. Interesting Twitter debate about valuations. Are they too high? And are they startup killer? Tons of data on incubators and valuations. Looks like right now people were complaining, at least on the Twitter, about the $15 million Y Combinator caps are back.
Yeah, I mean, this is kind of always the debate. And I think people kind of talk past each other in this debate, saying like, oh, you can't value invest in startups. And I think no one's saying that. So let me make a different statement than valuations are too high, just because I think it's a better frame, which is round sizes are too low. If you're raising at $20 million, don't raise $1 million, because you're not going to position yourself for success going forward. So I'm not complaining about your valuation. I'm complaining about your round size. You do a party round of 1 million at 20. Good luck with that.
Yeah, and the reason is you've now diluted 5%, let's say, for the million. And now you've only got $1 million to build a $20 million enterprise value. If you don't get to 20 million in an enterprise value, which would be, I don't know, what amount of revenue?
Getting to a Series A. I don't know that it's necessarily a fixed set of milestones around revenue. Often it could just be technology.
But if it was an enterprise software company, you'd be looking at
$2 million,
$2,
$3 million of revenue, and a clear market leader at this point if you're going to go raise a Series A, right?
Which means you're going to...
It's real tough. It's a high
real
bar.
hard to do.
And so the question is, well, what's your plan B? No one ever thinks about their plan B. We're all special, beautiful unicorns.
Yeah.
But to raise one at 20, you're going to put together that round with a bunch of people who are not going to haggle with you on price, right? And I always think about it as it's infinitely harder to raise $1 million in one check than it is to raise 100K checks from a bunch of people who aren't going to be there when you need that bridge because you're at 750K of revenue, right? And so you've actually built some enterprise value. You just created a structural risk in that round by making dumb choices that's going to kill your company. So I think the debate ended up being, as some of these Twitter things are, a little bit lower brow than it could have been. But I think
shocked.
Yeah, right. The for the founders out there, I think you want to surround yourself with people who can help you think about building a big pie.
Yeah.
And so raise a fair round. Investors shouldn't be screwing you. You shouldn't be thinking about them in this very transactional way. You got to put together a team that's going to help you for the long haul.
Yeah.
And I think that's not the mindset of many companies that are in a position to raise whatever.
Yeah, just say Y Combinator companies are looking to, they've positioned the investors as the enemy. They position them as adversaries, I think. And that, I think, is the big problem, because you get caught in this trap where you had a party round and then things don't go well, like you're saying, and you're at 750 in revenue, you're burning whatever, 50K a month, you got a real business. But now who's going to invest at a 20 million on that business that's proven it can't grow fast?
Here's what I'll give my outsidery, very, very occasional amateur hour and angel investor and, full-time entrepreneur. Market's going to tell these folks, right? If I don't even understand what the debate is, because do I think that is too high, or do I think that is ridiculous or unreasonable? Yeah. So I'm just not going to invest in that. What are we even talking about? Just if you want to opt out, then opt out. And if you want to be, what I would say is probably not super wise, then opt in, and maybe you'll have a good outcome and maybe you won't. To me, I think the real problem is that there's a lot of inexperienced founders out there getting some really bad advice.
That's exactly right. I mean, and people have said, hey, well, this is the market. I think that's right. So to me, the market is not the problem. The market's going to be what it is. The problem is that these founders are doing things that are just going to burn 2 years of their life, right? They're going to burn 2 years of their life. They're going to shut this thing down, and they'll have another shot. But it's kind of a bummer, right?
Yeah.
I'd rather founders not burn 2 years of their life with completely unforced errors. So yeah, the market is what it is. And to be fair to YC, I don't actually think that they're, I don't think that the advice people are explicitly getting is, hey, investors are just, they're idiots, be transactional. I actually think it's you look around and everybody else is raising at these valuations, and you feel kind of an ego thing around it.
That's definitely it. I mean, I've heard that directly from YC people, that they're trying to set a record. They're like, we want to get to 25 cap,
It's really expensive. Everything is really expensive. Everything, like from top to bottom. These prices are not just reflective of the venture capital market. It's reflective of housing costs and what it costs in terms of equity to recruit a great engineer. Top to bottom, everything is insanely priced right now.
Well, but those should be about round sizes as opposed to valuations. So yeah, you need $3 million to get to a Series A in San Francisco. That's a little bit nuts. But actually, you could do that at a 9 post or a 25 post, right? You need more money to get there. It doesn't necessarily imply larger valuations.
And I mean, I think again, some of this is like experience and maybe a little bit of enlightenment. And I'm gonna vaguely pat myself on the back here, but I had an opportunity a few years ago raising a round from an institutional who said, just pick whatever valuation you feel is reasonable, right? And they were doing like a few $1 million in the company. Just pick your valuation. And I intentionally picked something that post was sub 10 because I didn't want to fall victim to this trap. Now, granted, like, the outcome is still yet to be seen because we're still working on stuff. But, that is just a function of me having great advisors and having had experiences. So, that's why I say, like, to me, the problem is not what is the market going to bear or not bear. I think that's going to make itself very evident very quickly. It's really, what kinds of advice and inputs are these founders getting?
Yeah, I think that's right.
Yeah. The other thing that's kind of a bummer is now there's, I guess, 200 of these startups in the demo day. And my understanding is like the top 5% don't ever go to demo day. They close their round in like week 2 or 3.
All the good rounds are done by demo day, every single one.
Yeah. So basically, if you're going to demo day, it's like if you don't know who the worst player at the poker table is, it's you. Like,
right. Yeah.
If you're the dipshit like dentist, new angel investor going to demo day and just popping 250 into like 4 companies, you're picking if you believe it's an outlier based industry, and those people are good at it, the Mark Andreessens or whoever coming in early.
But isn't going to demo day like investing in crypto funds, right? I mean, at this point, is there even anything proprietary about it?
No, it's remnant inventory. I mean,
remnant inventory would be the way to look at it.
You do get lucky sometimes. I mean, Bobby Goodlot pointed out to me, he said, I got a 200x at a demo day. So great, like you can do it. But I mean, the number that I would love to see would be if you indexed the YC batch at their demo day valuations, what's the IRR in that pool?
Right.
And I suspect that's very different than YC's IRR because their cost basis is literally 10x less.
Yeah, it's 1.7.
And then you're seeing some selection bias going into that pool. So
why doesn't YC release that information, you think?
For obvious reasons.
Yeah, I mean, look, they're not obligated to release their numbers. I would love to see some of that data. I think
they operate somewhat transparently.
No. Not with a list of companies, though. No.
I'm saying you could anonymize this.
Yeah, I'd love to see that
This could be aggregate data that they
Here's
put
the thing.
Which would frankly like help bolster their case.
They don't want this data out there.
Yeah, I mean,
it would be negative. I believe the IRR would be, to your point, PT, from demo day on with those high valuations would be terrible. Now, if you could invest in a YC fund at the investment they're making, you would do that all day long.
And so a lot of those companies get to A and do really great rounds beyond. So, I mean, I think the way that more savvy investors look at this is demo day is a nice place to socialize, and you either did the seed before or you're there to sort of mark some of these folks to see what it looks like at the A. And that's fine. I mean,
yeah, it's a big networking event. It's like a cool party now. Yeah. Did you go this year? It was on the pier.
I don't go to these things.
I don't go to it anymore either. I mean, I don't know if I'm invited actually. I've been too. If you're critical of them or you're critical of anything, like if you even have this conversation we're having, they will literally put you on the do not fly list and like.
Yeah, I don't feel like I have a bad relationship with those folks, and I'm very frank about the things that I think they could be doing better. We've had very constructive conversations, so I don't mean to be critical of YC, but I just find demo days to not be very useful. And I used to run a demo day, right? They're just right. You go and you see these pitches; they're all polished. It's hard to really know. The good deals are done before. So if you want to get involved in accelerators, go early.
Yeah, week 2, week 3, week 4.
Meet these companies, build a relationship with them is how I think about it.